Hello, and thank you for listening. My name is Luke Mardigian, and you are listening to Be Insured, a show where we discuss a variety of topics related to insurance, business, and leadership, so you can stay protected while growing a thriving business. If you live in Michigan and you own a car, this is a can't-miss episode. We have some phenomenal guests, and we are covering one of the most complex topics in our state right now that directly affects you and your pocketbook. Michigan just passed this new auto insurance reform, and many of our clients are calling in saying, what does this mean? What's going to change? How will this affect me? Well, that's exactly what we're going to break down for you in today's show. And I'm very excited because I have an expert panel joining me, and they are
Roger Graff, Vice President, Farm Bureau Insurance.
Eric Gestring, an agent at the Mardigian Agency.
State Representative Graham Filler from the 93rd District.
Graham, thanks so much for chiming in via phone. You had an event today that you could not miss, but we really appreciate you making the time to get on here and inform our listeners.
Sure.
All right. Before we dig into things, Graham, could you talk a little bit about the circumstances that led up to this legislation? Why was it so necessary in the eyes of our lawmakers to revisit this after 40-some years?
It seemed to be across the aisle and pretty much across the state of Michigan. Every state representative, senator, actually every gubernatorial candidate who ran decided that no fault needed reforms. And maybe they had different reasons for it, whether it was fraudulent issues, whether it was bad acting attorneys down in the Metro Detroit area, whether it was overbilling for claims, essentially no fee schedule.
Right.
And it sort of came to a hilt. People have been trying to do this for 40 years, ever since the system started. And it was started for a good reason, which was to stop everybody from just suing each other when you ran into somebody.
Right.
But unfortunately, the bad actors got in, and a lot of people carved out a corrupt part of it. So I think there was a push across the aisle. It eventually passed, I think, 94-15 in the House, 34-4 in the Senate, and of course the governor signed it on Mackinac Island.
So, Graham, why now? Was this just a tipping point? We had enough people in our state who were upset about this and sent in letters and phone calls, or was there some type of other sparking moment?
Yeah, this is a great question, Luke. So, first of all, this was the critical mass. You finally had enough folks in the legislature to get the votes, because people had tried this before. And
yeah, a lot.
A lot. Every 2 years, somebody comes up with a new plan. Also, there were compromises because we are, quote unquote, divided government with Republicans and Democrats, both having leadership. There were compromises where in the past it was essentially, here's my blow up no fault plan. I hope you pass it. Or everything's fine and don't do anything. And so there were a bunch of compromises. So it is going to be complex going forward. But a lot of people worked together across the aisle to make this happen.
Yeah, and I personally think it's going to be great, and I'm thankful that we passed it. Eric, you and I are kind of on the front lines as agents when it comes to these changes. What types of questions are clients coming to you with about the law reform?
Well, immediately I had a lot of people going, well, what is this? Is it going to be Detroit area is going to get a reduction in pricing and we're all going to get hiked up over here on our side of the state? A lot of them just confused as to, I mean, even with it the way it was, people had no idea why they paid so much for insurance. And when I explained it's because we have unlimited medical built into PIP. I mean, you have people getting paid the rest of their life because of injuries, which is a blessing, but also it costs money.
Yeah, a lot of money.
I mean, the biggest questions are, where is it going to go? How is it going to change? Those are the things we're going to touch on today, though. So I believe I'm excited about this.
Yeah, you're right. A lot of people had no idea what coverage they had before. So when you say it changed, they're like, I don't even know what changed. What does that mean? It's kind of actually nice because this bill did define some boundaries and some options where we had no options before, but that makes it more complex, which means that the need for a insurance counselor, somebody who can actually advise you on which coverage to pick, is going to be so critical and important. Roger, how are these changes going to affect Farm Bureau insurance customers, particularly at time of claim if they're in a car accident?
Well, just kind of going backwards there, Luke, looking at it, and the first thing is what we think of, and the inquiries that we've had, even in claims, is that how is this going to affect my premium? You know, I hear that there's going to be a big saving. So starting before that, what it does is it allows the customer choice, whereas the customer didn't have choice before when it came to the unlimited medical. So if we look at the PIP aspect, just from a cost perspective, you know, the typical policy we're looking at, if you look at your PIP amount in there, it's about 40%. So we target, you know, the 40% of it. So then that's where it drills back. So now it just allows a choice. We can get in that a little bit further down the way here in terms of the choice, but it also it reduces fraud, you know, and as we know, fraud increases. It just increases the cost for everyone. So with setting up, you know, the state has a fraud department right now. The Insurance and Financial Services Department has but now it's going to be supported and maintained by the state, which it'll give it more strength. And also it sets parameters now where there were no parameters before. So when a person was treating, as you mentioned about the unlimited and no fee schedule that Graham mentioned, you know, we see bills, you know, we'd see an MRI that might be, you know, that would think, you know, $900,000. You know, we see them $5,000-$6,000. Right. Well, you know, we can't afford. I mean, that's not what's reasonable, and then it ends up in litigation. So the whole idea here is, and Graham had mentioned it, that the basis of no fault back in '73 was to reduce litigation. It was actually to give an injured person, you know, a quicker avenue in terms of their medical treatment and their wages. So that's where the first party claim came in. And now you get to make a claim against your own company. You don't have to chase anybody down that hurt you.
Right.
You know, and that was the whole basis of it.
Yeah, and it's interesting because in reality, it didn't reduce lawsuits over the long term. Eventually, it got to the point where it just exacerbated it.
And actually, back in 2017, there was a specific case that came out, and what it did is it gave the provider the direct claim against an insurance carrier. Well, that opened up the door to where there were more lawsuits. I mean, our personal injury protection lawsuits since 2017 have literally, it's 250% higher than it was.
Wow.
So
I wasn't aware of that. That's incredible.
Yeah. So what it did is it created delay. It created a higher expense. This is a good thing. I mean, this is a good thing.
Yeah, I think so too. I'm concerned that it may defer some costs to some other areas, but you know, my primary thing with this bill is that people have options. I mean, that's if you can pick what you have, then you can't be terribly upset about what you pick. Before, when you're forced to adhere to a specific system that the government tells you to do, I think that's a recipe for something going awry at some point. Now, Graham, Eric mentioned it earlier. Some people are looking at this bill and saying, does this mean that the rest of the state's going to subsidize some of those costs that Metro Detroit sees? You know, Metro Detroit has their average auto policy is $5,500 a year.
Yep. And
the rest of the state's closer to $2,200 a year. So are we going to see that $2,200 group, which is 90% of the state, subsidizing that area around Metro Detroit?
So I think broadly speaking, everyone acknowledges there's a huge issue in Detroit because people essentially are are driving without insurance,
right,
which is the worst case scenario because they get in the accident and then it's just shrug your shoulders and we all pay it. So we want more Detroiters on insurance, and as an insurance pool works, the more people that get in, the less the rates go overall. We want it spread out over more people.
Right.
So we think this will inspire more Detroiters to actually get insurance, while right now, you know, whatever it is, 3/4 of individuals are just saying, I'll just drive slow on the back streets and not buy insurance. And so that's our hope. More people in, more liability spread. And again, one of the discussion points while this bill was being negotiated was people said, stop using, what did they use? Areas, zip codes.
Zip codes.
And so non-driving factors. And I realize there's a lot of discussion behind that. But in this bill, territories can be used by insurance companies.
Yep.
And so it doesn't completely leave it on just driving factors.
Yeah, and Roger, do you have something to add to that?
Well, just what it does is that, we still use census tracts. That's what we use. It's not zip codes. Or it's about 4,000 people per census tract. Think of that. So we use that. It's one thing to spread the risk amongst the 7 million vehicles, right? Just spread it across the state. Well, that's where you get into the situation of, you get the individuals that have a very, very low risk. Well, they're going to subsidize the ones with the high risk.
Right.
So it was definitely a challenge. That's why it took 40 years to figure it out, because you can't make everybody happy. And then especially when you take away items that will better identify what the low risks are versus the high risk. But we get it. And credit scoring is the other one. The FICO credit score. That can't be used. And with Farm Bureau Insurance, we don't use that anyways.
Yep. Yeah, we sure don't. Yeah, we thankfully we already comply with even the new law. So, all right, let's talk about rates. This is what our listeners really care about. What's going to happen to rates? Are they going to our rates? Are they going to increase, decrease? What can people expect?
Well, go ahead. Go ahead, Graham.
There is a mandatory rate rollback. So if you buy new insurance, it's pretty much everyone does actually. So there is a mandatory rate rollback.
Wonderful.
And I just want to put that out there, and I know that was probably one of the main things that people ask me about.
Yeah, I think it only applies if I'm and Roger, correct me if I'm wrong, but I think the rate rollback only applies to the unlimited medical or the multiple medical choices. Is that right, Roger?
Yeah. What happens is that effective July 1st, 2020, what we're going to be locked into an 8-year fix. So we're not going to be able to move rates for 8 years.
Okay.
And the way it starts out is that if a person elects to opt out of it, this is about the medical portion, then there's and we'll give an example here in just a second, but there's a dramatic reduction. And then what it does is it just goes backwards. If you elect to take, say, instead of unlimited of $500,000 for your medical bills, then it's going to reduce about 20%, and then $250 is 35%. And then people on Medicaid, actually, if they elect a 50, that's a 45% reduction.
Wow.
And then if a person stays as unlimited, just kind of basically what it is today, there's still going to be a 10% reduction. But we'll get into that in just a moment in terms of how that actually works.
All right. Yeah. Perfect. I think that's the big misnomer with this bill is that it's just going to immediately reduce rates. Well, it's not going to go into effect until 2020. And then there's several phases that roll out. So
and a lot of options, right?
Yes, and there's going to be some mandatory pieces to this. So yes, before you can save money, you're going to have to make some choices. It's going to be required by the Department of Insurance and Financial Services, the state of Michigan's department, that you as a consumer come in and sign a piece of paper that says that yes, this is exactly what I want and I know what I'm buying. So before the savings can even come, every consumer is going to have to invest a little bit of time, and they're going to have to lean pretty heavily on their trusted insurance advisors to get the right coverage on that. And I wanted to address that coverage because we mentioned that it puts a cap on certain things. A lot of people don't know what PIP is. It's simply the medical coverage provided to you if you're in a car accident, specifically for a car accident. So think of it a health insurance policy in your car accident. Now that it's putting a cap on this type of coverage, is there any other insurances that we should be looking at or advising our insureds to look at to kind of fill that gap?
Yeah, the concern will be is if your health insurance is going to coordinate with your auto insurance. The majority now have gone away from that. That's a big concern.
How can our listeners find out?
Getting with your HR at your employer's office is going to be very crucial and beneficial to get in contact with your healthcare provider. And you definitely want to get in contact and make sure or find out at least if they coordinate with your auto insurance or not.
Yep. So it's a simple phrase. Does it coordinate with your, does my health insurance plan coordinate with my auto insurance? Will it cover any of it?
And that's a big deal. So,
and let's see, Graham, in your opinion, was this reform the right move for Michigan?
I mean, I can't say enough about it. Bipartisan group of legislators who people always think we can't get anything done actually did get something done. And folks have been asking for a change in the no-fault system. everybody acknowledged that it had morphed into something bigger, broader, more corrupt, and created a bunch of bad actors. And so I can't speak enough for, yes, maybe not 100% perfect, some kinks to be worked out, but I'm really looking at the big picture.
And there you have it. Thank you for listening to today's conversation. I want to thank my guest, Representative Graham Filler, Vice President of Claims Roger Graff with Farm Bureau Insurance, and Eric Gestring of the Mardigian Agency. I'm Luke Mardigian. If you want to connect with me, you can share your thoughts on Instagram or Facebook at the Mardigian Agency. Thanks, and we'll see you next time on Be Insured.